Samsung is minus 8.77% today, and the reasons behind this move tell a bigger story about where global markets are heading. Welcome to MTRS_Market Pulse. It is July 20th, and today we are putting the spotlight on Samsung, a global leader in semiconductors and consumer electronics. Samsung is down 8.77% to $255,000 in today's session. Intraday prices ranged between $252,500 and $265,500. The long-term fundamentals for Samsung revolve around memory chip cycle recovery, foundry competition, and smartphone demand. Investor sentiment is being shaped by Samsung profit surges over eightfold to beat estimates as RE boom fuels memory chip crunch. Let us look at the broader sector picture. On the geopolitical front, this comes as oil prices rise after Kuwait says Iran attacked water desalination and power plant, adding pressure to energy markets. This is adding a risk premium across energy markets and supporting safe haven demand. The key macro overlay remains monetary policy. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. Any surprise in the rate path could trigger outsized moves. On the data front, investor sentiment is being shaped by Wall Street ends lower as chip weakness offsets solid earnings, economic data. Looking at how sector peers are positioned. Kotak Mahindra Bank surged plus 3.57% to 389.95 Indian rupees in a significant session. Investor sentiment is being shaped by Kotak Q1 FY27 presentation, 23% profit growth, asset quality improves, investing.com. With momentum this strong, traders will be watching the $413.35 level closely. A clean break there would confirm the uptrend and could bring in additional momentum buyers. Risk management remains critical, always size positions according to your own risk tolerance. TCS surged plus 3.09% to 2,269 Indian rupees in a significant session. Equity markets are responding to reports that TCS begins FY27 with continued growth, wins multiple RE transformation deals, Tata Consultancy Services. The 26 to 28% EBIT margin band has been consistently delivered. The market wants to see whether AI-driven productivity allows margin expansion beyond the upper end of that range. Attrition stabilization is a positive signal on demand confidence. AI services deal conversions are the emerging growth driver. Meta is down minus 2.79%, trading at $646.01. Investor sentiment is being shaped by three RE spend metrics that keep me buying Meta leading up to earnings report. 24/7 Wall St WhatsApp monetization is the next major revenue unlock, still largely untapped outside of India's business messaging push. AI infrastructure spending is heavy, but the ROI is visible in ad performance metrics. Any positive user growth data from emerging markets would be a catalyst. Here is our analytical view on Samsung from here. Investor sentiment is being shaped by Samsung profit surges over eightfold to beat estimates as RE boom fuels memory chip crunch. The HBM supply competition with SK Hynix is the defining story. Samsung needs to close the yield gap to win hyperscaler HBM contracts. Consumer DRAM pricing is recovering as inventory normalizes. Watch for any Nvidia or Google qualification update on Samsung HBM. Here is your market watch list heading into the next session. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Every morning, before markets open, we break down exactly what is moving and why. If you want that edge every day, subscribe and hit the bell icon. If today's analysis was useful, a like is the best way to support the channel. We genuinely appreciate every single one. We read every comment. Drop your view below. Thanks for watching MTRS_Market Pulse. Nothing here constitutes financial advice. Please conduct your own due diligence. Good luck in the markets, and we will see you in the next video. That is our spotlight on Samsung from MTRS_Market Pulse. Subscribe for daily coverage of the world's biggest stocks.